All right, what's up, traders? Another one here from the Dark Side family. And in this video, we're going to talk about a phenomenon that we've all experienced, all of us, every single style of trader, regardless of your approach. And that's having those good weeks, right? You know, sometimes where you have like 2, 3 good weeks in a row, and I mean, you're crushing. Take profits are being smashed. You're maybe missing some trades, but the market is playing out, pretty well as far as what you were anticipating. Your analysis, they're all on point. Couple losses here and there, but nothing surprising. In other words, just really good conditions. And then all of a sudden you have this week or these 2 weeks or sometimes that month of where it's like you have absolutely no idea what you're doing. And you just don't know what you're doing wrong. You've been doing the same things and it's been working to a sense, and now it's just like nothing works. You don't understand what's going on, what the hell is happening, why, you start to spin into negativity, you start to dig yourself into that hole, and you question your strategy, you question everything at that point, and then all of a sudden the next week or maybe the following week things are back to normal, and you kind of just forget about that little lapse, so you're like, okay, well, maybe it was just me, or maybe I wasn't. But see, what nobody really thinks is they never really think maybe it's the market. Maybe it's not the market's time to be giving money. You understand, guys? Now, it may seem a little crazy, but the market moves intentionally, of course, intentionally. There's times where it really isn't going to produce any solid moves. And when I say solid moves, guys, I'm talking, and again, it depends on the time frame you trade. When I'm saying solid moves, I'm talking about, a lot of the trades that we post on our Telegram. I'm talking about rockets that you see on the 1 hour, 4 hour time frame. I'm talking about significant moves to the upside, pushes like this, sell offs like this, but pushes like this, sell-offs like that. That's what I'm talking about. I'm talking about big moves because there is always opportunities on the lower time frames, and with the correct, knowledge and understanding of the market, you can thrive in the little local markets all day long. That's not something that I particularly do as much anymore on the lower time frames, but my guys, they love it, and they own it. They're really good at that stuff. But what I'm really trying to get to is that not every day is going to be a trading day. Not every, scenario is a trading scenario. And being able to recognize that is very, very important because it'll help you avoid that week or that 2 weeks or that 3 weeks of, I don't know what's going on. What am I doing? I used to do this and it worked. Now it doesn't work. So it'll save you a lot of money because it's going to save you a lot of losses, a lot of heartache, a lot of mental stress and stuff like that. So, there is a couple things that you can look for, that'll help you recognize that you're actually in one of those situations. And well, one of them, I mean, a simple one that you can really use is just look at our Telegram. I mean, people should be using our Telegram channel as an additional confluence. If you see us posting every day and there's rockets taking off every day, you should probably be looking at those pairs that we're trading. If you see me posting majors, USD pairs with rockets going on Monday, rockets going on Tuesday, rockets going on, you should probably look at those majors too, because if I'm doing it, there's a really good chance you should be doing it too, and it'll probably work out for you. But you should also realize that when we're not posting as many rocket moves, big pushes and stuff like that, that should also trigger a little something in you like, all right, well, maybe I'm in one of those conditions that they talk about. Maybe I'm in a consolidated market, maybe not necessarily a trending market. Now, when I say that, guys, when I say trending, I mean big push, retracement, big push. That to me is a trending market, regardless of the definition of what a trending market they say it is or whatever. And to me, when I say consolidation, I mean sideways market, where there's moves because look, this might not look like anything if this was the 1 hour time frame, but if this was the 1 minute time frame, you know what I mean, or the 5 minute, from here to here is a significant push. That could be 50, 60, 100 pips. You never know. So it all depends. It goes back to your style of trading and what you like to do. But if we're not really posting too many rockets, it's probably because the market is in a consolidation phase. Now, if you're a Wyckoff trader or if you're familiar with Wyckoff, just think of it as an accumulation or a distribution that's taking place. In other words, On the higher time frame, price is in a zone, and it doesn't matter what you call this zone. If you call it your order block, your imbalance, your Fibonacci level, your supports or resistance, it doesn't matter. The fact of the matter is price is in a zone and it's working that zone. Now, depending on the time frame, the amount of time that it spends in this particular zone right here is when you're going to get those conditions where nothing makes sense, where you can't catch a rocket to save your life. Your order block, it's been hit, but it's not playing out. Your imbalance is filled, but it's not moving from there. You're catching moves, you're catching your move, and it's pushing, and then it just kind of dies out and loses momentum, and it's just kind of wasting time. Then it'll give you a little hint long, hint short. Those are the conditions you want to avoid. And a lot of times it's just a sideways market. Now, something to definitely keep in mind is that the dollar, okay, the US dollar, let's go to the dollar real quick. The US dollar is a global mover of the market. In other words, it touches every single pair, it affects every single pair in the Forex market. And when it's moving like it is right now, for example, if we just look at these dates right here, this is from Monday, October 10th. So if we look from October 10th to present time, you can see exactly what I'm talking about. There's not really any real structure here to build an actual case on. There's not really any consistent moves. The last kind of consistent moves were the sell-off that took place back on September 28th. Push, retracement, push, retracement, push. Remember I was talking about trending market. Push, retracement, push. Now we had one final push, and then it's kind of just been shitty. Shitty, and hence the reason why you haven't seen me posting too many rockets lately, at least not since last week. But that's the reason. Because to me, these aren't really my market conditions that I like to trade in. But there is definitely opportunities in here, guys, because, if I just post the trades in my chat, you'll see, how we are able to navigate what we call local markets and intraday plays, because there's opportunities everywhere. Don't ever confuse that. But if you're experiencing something where things just don't seem to work out, or maybe you're getting into a position and you're short and things are starting to go well, and then all of a sudden it just dies out and loses momentum, and you kind of get some just random price action, structure looks kind of funny, that's your sign, guys, to just back out, to just back off, because it's just not the time. It's not the market's time to give money yet. You've got to wait for better conditions, trending conditions, more familiar conditions, and they will come as long as you wait for them. The worst thing you could do is continue to try to decipher something like this. Because what you're doing, guys, is you're trying to be right. You're not trying to make money. And we can point it out right now together. When you look at this situation, how are you? Tell me where you're going to go. Okay, let's just look at this together. Tell me where you're going to go if you have a valid scenario to the top side, okay, and then you have a valid scenario to the downside. Tell me, how do you really honestly think that you're creating an edge for yourself? How can you say that this short or this long is going to be more likely to happen than this short right here? How could you say? You can't? What you're doing is you're trying to be right. But in reality, there's nothing here, guys. There really isn't. And finally, today on Friday, we're seeing some price action from the dollar right now. This is live. So we're seeing a significant push. Last time we saw one of these was back here, okay, on October 13th. Here we are on the 21st. So at least we're seeing some action. You're going to hear every bullshit reason in the world about it's Friday and the banks are closing, and forget about the banks and all that nonsense. It has nothing to do with anything. Okay, the fact of the matter is prices started to move. But when you look at it in this way, and you could recognize two scenarios, in other words, is it going to come here? Is it going to come here? Which way? Guys, this is intentionally shown this way on purpose so that it does create two different biases, so that it does create people that are waiting to sell, people that are waiting to buy. Because you know what all of that does? All of that does is just creates liquidity, guys. That's how they make liquidity, okay? By giving people two different views of the market and creating buy and sell biases. Okay, now depending on the strategy that you use, you're going to see obvious buys, the other guy's going to see obvious sells, and the only thing the market sees is obvious, easy money to come and collect. And that's why you'll experience so many losses in conditions like this, because they are literally designed to just create liquidity and take your money. When you the way the market works, you've got to think about the market This is something that we teach in our class. You got to think about the market like a truck, okay? And how the truck, it can drive for so long, but it eventually has to refuel, okay? Or it has to create the product, okay? Maybe it has to create more US dollars to deliver to wherever the order has been placed. All right, so when the market is refueling, when the truck is gassing up, you really have no business trying to get involved and decipher what's going on. Because inside here is where you're going to see this right here. You're going to see valid scenarios. You're going to see sells. You're going to see buys. You're going to see moves that just won't sustain. You'll see moves that'll, maybe you took this sell and it went with you for a little while and then it ran up here and attacked you. That's when that stuff happens, guys, because it's just not our time to be in the market. The best thing to do is to just take a step back and wait. Let it air itself out, let it fill up, and then let it start to trend again. That's how you separate trying to be right and trying to make money. Very, very often can you create two high probability scenarios on one pair. And that should be your first sign to just shut off your computer and walk away. Because it's not about one of them being right or one of them being wrong. A lot of the times they're both right and they're both wrong at the same time. And I know it's kind of hard to wrap your head around that, but that's how you're going to get people to justify a sell and to justify a buy at the same time. And all that does, guys, is equal money. That's all it does. It creates liquidity. It creates money because they're showing everybody what they need to see. They're showing the buyers what they need to buy, the sellers what they need to sell. And unfortunately, if your market IQ isn't high enough to be able to go down into the little local markets and the little lower time frame plays, you really shouldn't be trading in these conditions, And it takes a lot of patience. And if I don't know what level you guys are at, but our guys obviously can navigate these kind of conditions. But I don't recommend that you do that if you're not trading at an extremely high level because you're probably just gambling. You have no idea what the real structure is. You're getting so lost in higher highs and higher lows and higher highs that you have no idea that you're in a bearish market condition. And it just gets confusing. And to be honest with you guys, it's just not that profitable, especially for somebody who's really not trading at an extremely high level because these conditions are difficult. I don't even really pay too much attention to the market when it's like this, because it requires a lot of screen time, low time frame, 1 minute, 5 minute, 15 minute, and just watching the plays. And again, if that's what you like to do, if you like to spend a lot of time in front of the computer, by all means get involved with that stuff, and just kind of what I would say to give you any hints is I would really pay attention to when the market gets active and when it consolidates on low time frame. Keep an eye on close of New York, keep an eye on the London New York overlap. Keep an eye on the 1 p.m. candle closure, my time, which is New York Eastern time, UTC4. Keep an eye on that kind of stuff, and it'll give clues. But honestly, you gotta really make that market work for you. And if what you're doing worked last week and you were crushing it last week, maybe you took 10 wins, 2 losses, you had a good week. Then all of a sudden this week you took 4 or 5 losses in a row. It's not you. It's not your strategy. It's your time to just back off, okay? And let the market correct itself in a way that you know how to make money from it. Because just because we're making money off of it or somebody else that you follow or that you trade with is making money, it doesn't mean that you're going to make money, because no matter what you do, you might think you trade the same way as somebody else. You might both trade smart money concepts, for example, but no two people think the same. So that's why you'll see somebody winning and somebody losing. It's just a different approach, a different understanding, a different feel for the market, and it's not, again, if you're taking losses back to back, it's probably not you, because you've been doing what you're doing that's worked before. Just give it some time. Let the market correct itself. Let it air itself out. Let that market structure start to actually build. And then you'll realize that things are going back to normal. Because this right here, guys, this is not easy. This is not easy to trade. This is what happens when the market is here to just kind of screw around with you for a while, because you know what happens? You blow your account, right? Now your account's blown, and then you know what the market does? The market starts trending. It makes a big push, easy correction, and another big push, and you're like, wow, I could have caught this sell so easily. I probably could have caught this buy, and I definitely could have caught this next sell. But instead, you were so busy trying to figure out something that has no meaning, just bullshit price action, manipulated price action, and you ended up blowing your account or getting negative, taking a few losses. Now you have analysis or the paralysis analysis where you're scared to take a trade. And you know how it is. You just start digging yourself deeper, 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 deeper into the hole. And what do I say, guys, on so many of these videos? The best way to get yourself out of a hole that you've dug yourself into is to stop digging. Okay? So maybe that means stop trading. Maybe that means stop analyzing. Just stop. Just stop and take a step back. The charts aren't going anywhere. Okay? They'll be there when you get back. So just a lot of times, just refocus, guys. Okay? Wait for pushes like this. Okay, wait for them. If you don't see me posting rockets on our Telegram, if you don't see dark side rockets on our Telegram, there's a good chance that the market is just building up. Because these rockets, they take a lot of fuel. Okay, they take a lot of fuel to be able to fly as high and as hard as they do. So if there's no fuel, guys, there's no rocket. So let them fuel up, and once some rockets are ready to launch, you're going to see them start flying around. The only other option, guys, is to mess around the lower time frames. And again, I do not recommend that unless you have an extremely high market IQ. You understand liquidity, you understand intentions, you understand daily cycles, you understand local markets. And to be completely honest with you, I really don't think a lot of people understand that stuff. So just be careful out there, and don't go wasting your time and blowing your accounts and ruining your challenges trying to navigate through impossible conditions. At least that's how it is for the dollars right now. Again, what do I say? Go find familiar scenarios. If the dollar's consolidated and it looks like shit, go look at the other pairs. Go look at maybe the pound pairs, GA, GCAD, G Swiss franc. Go look at those, or maybe look at something else, the yen pairs. But just stay away from those dollar-driven pairs, because until it gets trending, it's tough. And it's been beating people up all year because for some reason, everybody wants to sell the dollar. The only reason why they want to sell the dollar is because they think that it's went too high and now it needs to come down, which makes absolutely no sense at all. So stay away from that, guys, and I hope you're able to kind of read between the lines on what I'm telling you here, and wish you all the best.